welcome back. We will discuss what is happening in DeFi, what's going on. We will explore together why DeFi is a paradigm shift in the financial industry as we know it today. All right, guys, and welcome back to ON-DeFi. And today we have a very cool guest. We have Julien Bouteloup on the channel, if I pronounce that correctly. And Julien is a serial entrepreneur and inventor. He already started being entrepreneur at the age of 14 when he was selling and was building websites and selling hardware technologies. It's quite amazing. He holds a master's degree in electrical engineering and a master's degree in computer science, specializing in artificial intelligence. He started he moved to the US and started as a IT consultant and in the security and defense space. And after 2 years, he quit that job and became a freelancer. And well, Julien, I think you can maybe tell a little bit more about that yourself. I'm very curious how you, with your amazing background, how you got started and how you found crypto. How did the journey go?
Hey, thanks, Amadeo, for having me on the show, and I've been feeling a lot of different great interviews that you've made, such as the one with Andre from Wire a couple of weeks ago. Yeah, so my name is Julien Bouteloup, and I've got a intensive background in science, so mathematics and physics. Got involved in security defense for about 2 years in a research area, building machine learning and AI in the defense area. And then I realized that what I was building was not really used for a good cause, even if that was for security and defense. But then at the end of the day, you end up selling those technology to the people that are offering the most money. So then I quit, went to Asia, got involved in a venture business capital as security chief officer, and then I went back to Europe. In London, where I settled down in London, and I got involved. I was involved in a few different startups that were very successful, and then I started my own company in consulting, machine learning, building for different clients over there.
Mm-hmm.
I got involved in crypto back in 2011 when I was playing Counter-Strike, so CS. I had 48 computers doing files, cloud services. I mean, that was back in 2011. So there was no like kind of AWS or in Europe such things. And then my friend asked me if I could run this algorithm for competitions, between his own stack and my stuff, and then it happened to be Bitcoin. So I got involved in Mt. Gox and all these different things. When I moved to London, I was a Bitcoin maximalist, and the idea was to go to the first meetup, or the early stage of Ethereum, and to shit on those guys because they were trying to build something that was a little bit ridiculous. And then I really like it. So then I end up being a Ethereum maximalist. Right. And I think I'm still a big Ethereum maximalist, but yeah, I moved away from Bitcoin a little bit.
I understand. Wow, that's a very interesting background, man. Yeah, so yeah, very happy to have you on the show. And today we will we'll dive into the DeFi and staking network, what your company's staking capital, your involvement in CRV Finance, and we're talking about NFTs and your new newsletter with your new Rekt newsletter. But yeah, so you say you like ETH, you're a bit of a ETH maximalist after seeing Bitcoin, and then as a developer, you saw like, okay, Bitcoin's cool. We can do a lot of cool things with Bitcoin, but Ethereum is just a bit more flexible. What attracted you to Ethereum after being involved in Bitcoin, and then you saw Ethereum? What was the what attracted you the most at the time, or still attracts you?
Yeah, I think the back then, or maybe now, I can see like Bitcoin being like the same way that used to be in the 80s or 90s with the gold reserve for institutions, like for central banks. Bitcoin could actually be still used as a reserve of reserve asset.
Yes.
But ETH, Ethereum is really the internet money. It's really like being able to build legal financial products. And what I really liked back then was the ability to use a smart contract to program an idea without having necessarily the front end and the back end. You can just wake up, build a smart contract, deploy the smart contract, and then see the project live, man.
Yeah.
That's what I did in like called a project called ID Blocks to provide unique identification system for people in Papua New Guinea, in the other part of the world, and it was very successful, and we won United Nations, and it was adopted by the ADB, Asian Development Bank, and this was super fast. It was just built in a hackathon in London. So you can, and now obviously with DeFi, feel like it's very old, but just less than a year old. Now with DeFi, it's very easy to build something from your garage
Yes.
and raise like 25 or 50 million US dollars and then continue building it. So it's I think ease is just freedom of thinking, you know.
Yeah, there's no boundary between the builder and the idea. That's also what I feel. And as you said, there's a lot of things going on. So it's just, it keeps us all very busy, and it's quite interesting. And what do you think about the Spadina testnet? Do you look forward to that, or do you participate in that in any way?
Which one?
Tomorrow the Spadina testnet of ETH is going live. So they're going to test.
Oh yeah, it's 2.0. Oh yeah. We've been involved. Well, as mentioned, I mean, Stake Capital was originally started as a staking as a service.
Yes.
Because when I saw the staking industry taking off about like 2 years and a half ago, with my experience, I had some personal investment that I had to make staking for in different projects. So I was looking for staking as a service provider where I could actually give my assets and they could stake for me. But then as I was looking into the industry, I saw that my experience with Bitcoin mining, I could potentially do those staking as a service myself. And that's how I started Stake Capital as a staking as a service provider. But now 2 years later, now we're doing more than that. Staking as a service is 15% of Stake Capital.
Yes.
Stake Capital is a hedge fund, and we do liquidity provider, market maker, and arbitrage. So different things in the DeFi scope. Very like hedge fund type of style in Web 3.0, trustless way.
Very nice. That's very interesting. You're also participating in that, and I would recommend everybody to check out the website. It's basically a service where I can
Stake.capital. We also were the first one to talk about yield farming with the Stake DAO back a year ago. We introduced the concept of staking derivatives. They were then taken off by some few other staking provider in the space. So we've been very involved in the research area and also building different tools in the ecosystem. The original idea was the staking as a service. When I was talking about it, like on GitHub or like in a different chat, I was telling people that I don't really, obviously you want to make money, but for me, staking as a service is not something that would create a lot of money for yourself, because the fees that you're charging are always going to be smashed by centralization. Meaning, for example, centralized exchanges and Binance or Kraken or like other projects, they will offer staking for free. The reason for them to offer staking for free is because the staking is not their primary business model. Their business model is trading. So they want to attract people, they want to get retail to come and trade into their platform. So they don't care about offering staking for free. So I always thought that, for me, staking is just a way to access voting power, so governance. And that's always what I've been very passionate about, governance. Because when you have governance, you replicate how society works, meaning that you have lobby and you can actually use your governance to interact in a few different projects, and you'll offer you help or offer like some strategy investment proposal.
I agree. And you basically, you see yourself staking capital as a voting proxy, right? So you're an educated voting proxy, and people that have some capital, or maybe even some funds that have some capital, they can pool the capital towards staking capital, and you probably make more educated decisions than a Binance or something like that, right?
Well, yeah, I would say yes. Officially, that's probably something that we'll tend to argue with. I would say, but unofficially, the goal of stake capital is to make money for people that delegate to us, but also for us is to use those delegations as voting power to power our DeFi products,
yes.
Like liquidity provider, market maker, arbitrage. So we can utilize those voting power for us to build or empower new products that we're building. So
yeah.
My point is, people like you got some staking as a service provider in a space that will argue that if you delegate to them, they will make good voting power, like good decisions and whatsoever. At the end of the day, people not putting everyone in the same box, but they don't really care about governance. What they want is APY, what they want is return. And as long as their returns is high, then they will just follow and give their delegation to those guys.
I would like to challenge that a little bit, because I also think so, for example, in the Netherlands, I'm from the Netherlands, and you see like a lot of like more higher net worth individuals or investment funds, they invest, and they all want to have like a social impact goal or something like that. So I see crypto as a tool for hyper financial inclusion, and also for making a lot of more economic parts of our economic system more efficient, right? I think as an investor, as a long-term investor, you would better have.
That's a different discussion. In this, what you're talking about are institutions, are people that are highly regulated and tax-wise incentivized to do what you're saying. For example, we could argue that why Netherlands is one of the first top country in Europe where people have a Tesla. You could say because Netherlands people are more aware of renewable energy and climate change. Well, I would attack this statement saying, well, they're tax incentivized, So
Sure.
My point is, obviously, when you have something that is regulated, that is incentivized to do something, they will have to do it. But if you get back to the ground, to the individual level, people will chase the yield. And you can see that with this kind of new, a lot of people will attack me for saying that, but with the people like following up these kind of what we call the fair launch token.
Yeah.
Fair token launch, which is basically forking hours of some young kids that have been working for a year, probably eating pasta most of the time, and creating a product, awesome product, and people are like, let's fork it to make 100% community token launch, which I think is unfair for the founder, but it gets back to my point, meaning people chase the yield and the money rather than actually what is fair or not.
Yes and no. I do think also investors are investors for long-term growth, but yes, of course, on short term, yeah. I think of course, and also on the, yeah, you want to have the highest API. Yeah, of course, that's what you vote for. But also you also want to speculate on the projects that potentially on the long run will perform the best. And what I really like about your stake capital, because you guys have been around for so long, and it was also before this whole DeFi hype, when when you were still exploring, and when we have Tezos, and we had basically you were there from the beginning, and you saw the whole space evolve. What do you now see with the whole Ethereum 2.0 coming up? Will a lot of these you do a lot of different networks. You have Alrond there, you have a Scale network coming up there, Tezos, Centrifuge. I love that project. Medic.
We have 20 of them, more than 20 actually. The website is very old, and we need to update the website too. But yeah, that's a good point. I think it's the evolution of not sure. I was like a Bitcoin maximalist, became ETH maximalist, and now maybe turning into a blockchain maximalist more than just a project specific. We made an acquisition of a Tezos Baker. We got involved, and we are involved in Polkadot. We're involved in Near, in Avalanche, in all those different networks. Mm-hmm. And maybe the reason why I'm actually looking at the interest, I mean, this is business-wise. This is a company. Company, at the end of the day, needs to pay the people that are working for the company. So we do what as a hedge fund, or as an entity, we dare to make money. I mean, that's no doubt to that. It's not and also to provide better services than what Binance could do. For example, Binance were involved in Loop Network. As soon as Binance got involved in Loop Network, we got out of the project, and then we basically were the first one taking as a service to tell what's going on in the Loom. And but Binance, they're making money. So we're different. Obviously we're there as a business to make money, but we also trying to do good things and call out projects or call out people if we need to, and also provide decentralization as much as we can. But the reason why I became a little bit more blockchain maximalist is because maybe of the ETH maximalist that I saw coming in 2017, and they were exactly doing what Bitcoin people did to Bitcoin. And that's what's actually scaring the shit out of me. It's like, we need to be careful, it's good to be ETH maximalist, but you get toxic vibe, and we need to call people out if they do bad things.
Yes.
And we need to tell people when they do good things. And it's not because we're friends or family, or like we know each other, that we should hide things, because otherwise if we do that, we'll get into Bitcoin shit where they actually, at the moment, where they cannot actually update the protocol. It's very toxic. People are sitting on their bag trying to wait for their money to go higher. And this is very dangerous. And this is happening in the East at the moment. And that's exactly what the other people outside ETH, they're trying to do. They're trying to lobby to tell, oh, look, in ETH, a lot of things are happening. Come to our network. We made it easy for you to build, and our community is very nice, and we also get you money to build it.
It's very interesting indeed. Yeah, I also believe in a multi-chain universe for a way, but right now there's a lot of networks. Like, for example, when I look at the Binance chain, for example, I like it. I like the Binance Smart Chain. It's interesting. They forked Ether, and they made it very easy to bridge and all that. But still, for long-term investing, I do want to have like this zero trust layer. I like the protocol sync thesis of what Bankless is talking about, for example. But indeed, it's going a little
Bankless.
Yeah,
Bankless is awesome.
Yeah, they're really
probably
awesome.
the best newsletter out there, I would say.
Yeah, they're really awesome. I will also link it below. So the protocol sync thesis is talking about, well, we need to have one zero trust layer, and there will be room for other layers. So I like also the Scale network. I like I was also a little bit
That's true, but
but
yeah, I'm not sure if actually Binance, I'm not a big fan of Binance chain because it's really centralized, you know? I mean, if you
exactly.
talk about projects like Polkadot, Tezos, Near, Avalanche, all the different projects that are trying to compete with ETH, they are projects that are aiming for decentralization. So it's interesting to look into them. And I believe, like you said, if you look at society, then betting on the fact that ETH will be the only one blockchain alive, it's against nature of society because you need competitions, you need capitalism, and obviously you will have different blockchains living at the same time. So project like Cosmos or Polkadot that are bringing bridges or zones, hubs, parachains, obviously makes sense. Makes a lot of sense because you will have those different chains that are tapping into different market region, like in Asia, South America. You will have different people liking different blockchains. So at the end of the day, you will need to bridge them.
Yeah, I do agree. But now, what I find that I also talk with Andre about it. Like okay, ETH right now is the ecosystem. It's the like when you want to launch a stable app like ETH is the way to go. And also now the new NFT evolution, what we're gonna talk about in a little bit. When we look at the highest, the Sora website is also built on ETH, and I think the reason is because the ecosystem is at this moment the most advanced, and it's the most easy to deploy something, and you know it will scale, you know it will work. It's been battle tested, right? Transaction fees are a little bit higher, but we know it will work. But yeah, in that regard, I do see other networks also taking a part of that. But what do you see? Let's say we move forward and ETH 2.0 is like, this will take, of course, a little bit longer. But if ETH 2.0 is successful with the different shards, how do you then see like different networks like Tezos or Cosmos in that ecosystem?
Well, they all building their bridge, right? For example, I mean, I know Tezos, Solana, Polkadot, Cosmos, they're all about to release, or it's almost already live, their bridge to Ethereum. For example, on Cosmos, it's called East Mint. And then on Solana, I think FTX or Sam has been working on the bridge. I think the primer, the biggest, what they're trying to do, and you can argue that this is unfair, they're trying to make it easy for people to copy and paste the Solidity smart contracts inside their own chain. So then people can just in one click deploy your Uniswap or a balancer or a Curve project into their own ecosystem. Well, for if you ask me individually what I think about it, I think it's a little bit sneaky, and it's obviously a little bit unfair, but I think business wise, it makes a lot of sense, and it's probably like with those bridges, we're gonna see a lot of new innovations. And
Yeah.
if you ask my business side, which is Stake Capital, for me, the more chains, the better the business is, so we can do market maker arbitrage across different ecosystem. And so more chains means more volumes and more transactions. So at the end of the day, everyone is happy. And as long as we bring more people into the ecosystem, at the moment, the market cap is about 450 billion, and it's being driving by ETH and Bitcoin. Like it or not, that's the reality of the space. And everyone, ETH is chasing Bitcoin volumes, and the other projects are also chasing ETH volume. But what about, instead of making competition between each other, we use technology to outreach other market, and we don't target 450 billion, but we target 4.5 billion, so 10x from now. And I'm sure that everyone will be happy in those different blockchain and will play in different, and then we'll just bring a new innovation in the ecosystem.
Yeah, I also see that, but I also see, for example, something like what we now see, and it actually works quite well. I tested out the Serum decentralized exchange. I tested out some bridges. It works. You can bridge over Ether. You can bridge over different assets. It works. You can also do this with Loopring. Also works. CK rollups work. So there's a lot of different paths to take at the moment, and it just needs to see what the majority or the community mostly in this case wants, and of course they will seek the highest yield. But I think at the end of the day, it's about the layer with the most with the least trust. So the zero trust layer in the long run will, in my opinion, like succeed. And that's why I think like a smart chain like Binance, yeah, they will have a small piece of the market, but the chain with the zero, with the most zero trust layer will on the long term win. But of course it needs to also scale, and that now is an issue with ETH. So if there's another zero trust layer,
Yeah,
that's better.
yeah, maybe. I think that's the vision we all want and all aim for, but I do believe that at the end of the day, the people, they don't really care about decentralization, like most of them. And but yeah, I mean, as people building the technology and then creating value in the ecosystem, that's what we should all aim for. But if you ask the same question in someone living in Asia, what is the most important aspect for you in blockchain? They will probably tell you like efficiency and speed. If you ask the same question in Europe, they will tell you decentralization, transparency, and security and privacy. So in Asia, the Asian market, they want efficiency, they want speed, they want to make money. It's different from the people in Europe. That's the reason why you've seen different projects. For example, like in Asia, it's Binance, centralized, Tron, centralized. If you talk to those people, they love it because they have a different approach to blockchain, different taste and different way. Yeah, different taste, I guess. So.
I think there's a bit of an issue because now it's just pushing tokens, and that's a problem also with DeFi. It's just pushing tokens to each other, right? So, for example, Flamingo that's just launched on the Neo network. I think, in my opinion, it's just pushing tokens to each other, and in a big part that's also DeFi now in the Ethereum space. But with projects for example, like Centrifuge that bring real world assets to the blockchain, or what was announced today, where Anson Young is building a very easy layer with baseline protocol to build on top of Ethereum and have like a shared workspace where corporations can both deploy their contracts, interact with them, and deploy it so that like two companies can like have agreements together on smart contracts. I think
they're building a dApp, right? They're building a dApp. They don't want their business to disappear, and they're building something that they can. Yeah, I think it's the future of all those different protocols. You know, you want to be able to use them without actually knowing that you've been using blockchain, and that's the exact same thing with the early days of internet when people were talking about HTTP and all those different protocols. Then in the late 90s or 2000, you had society like companies like Yahoo or Google that built on the top of them, and then everyone forgot about HTTP and all these different protocols. And I think that's the future of blockchain as well, is to make it so transparent for people that they've been using blockchain but they don't really know about it.
Yeah, exactly. But my point is like, I think that if we don't get real world assets in DeFi or on the blockchain, it's not, the whole DeFi space is probably not gonna really work out. I think not at the
scale. Yeah. You need to bring intrinsic value. So that's why projects like Centrifuge or VLT or project that are actually bringing real utility in the ecosystem and not just trading on existing asset that don't actually, it's that's true. I completely agree with that.
Nice. So you do see that you do see a world where you do see a multi-chain universe, and you're not sure if this universe will be ETH or another chain. And from a business perspective, it's stake capital. Of course, your incentives are to market make these different chains and to see where what is.
I mean, me personally, it's obviously ETH. Don't get me wrong.
Okay.
But yeah.
But so there you go. So it's yeah, that's an interesting question. I also asked a question myself. I when I was researching all of other chains, am I more of ETH maximalist, or am I making this assumption because of my knowledge of blockchain? I don't want to have a centralized blockchain. I don't want to work with Tron or Binance Smart Chain. To be honest,
I mean, ETH could be the most secure and decentralized chains, but then other chains could actually use it if something happened to them, and ETH is built in such a way that it's not aiming for the perfect triangle, like transparency, speed, or privacy. You can build, it's a block, it's a Lego. You can build whatever you need to, whether other chain like Polkadot or Cosmos, they want to be like more like a chain for where everything comes in one go, Well, Ethereum, you need to build it. In Parachain or Cosmos, they want to give you an SDK where you can do everything, but you can plug and play. When in Ethereum, it's different. In Ethereum, you need to build those blocks as well.
Exactly. I have before we move to the so with that regard, I cannot wait for the day that we will see cross-chain vampire attacks. Like I really
yeah, definitely. Well, it's happening. I mean, I'm sure Sam is like, because FTX is a big Solana player.
Yeah,
they're all into that. But at the end of the day, I know those guys. They're awesome people, and the team is fantastic. If you look at the Solana team, and also Sam building FTX, it's this guy is super fast. He's a builder, and I've got one. My spirit in the space is always long the builder and short the one that are not building. So my point is, we have all incentive to work with each other, rather than actually making competition, making fights and etc.
Yeah, I agree. Yeah, I also test out all of the networks. So let's see. I'm looking forward to the days. It's already happening, the cross-chain vampire attack. So let's see how that evolves. I have a challenging question. Like when you look at the token economics of ETH, now it's not the best because there was an attack of the unlimited supply basically. I believe this is also with the new improvement proposal of burning parts of the fees, that we get more of a deflationary ETH supply, and then the token economics of ETH will make sense. If we look at the token economics for something like dot tokens or Polkadot tokens, yeah, and quite interesting how you see, because like when I worked with Substrate, and I worked with the Cosmos SDK. Tendermint and thank you, and Tendermint and Substrate. But basically, you deploy your own chain, and you don't really need to sync back to the Cosmos chain. You don't really need to sync back to the main Polkadot chain. You can also say, I use this technology. How Centrifuge is using it, for example. Centrifuge is using Substrate 2.0, and they're syncing back to the Ethereum chain. What do you think?
Because they built the bridge themselves.
Yeah, they built the bridge themselves. Yeah, so they built their own bridge, and they sync back to Ethereum. They don't use the dot token in any way in their model.
Yeah, that's what you can. I mean, I think Sunny will like if Sunny from from Cosmos, where he left now, but you could potentially bring Tendermint inside Ethereum, and it will still be fine. You know, like it's just like or the substrate one, and I mean the mechanism, the ground power, and all the shit. It's just how you build it, and it's just I mean, at the end of the day, it's a blockchain, and it's the same vision. You know, it's just how you what kind of technology you use, and
I get a little bit of an XRP feeling with some of these chains, because it's like you know, Ripple the company and XRP the token, right? It's a similar feel for me with the Polkadot ecosystem, or some of the other chains that have like or EOS even. Like if you work trying to work with EOS, it's also like, oh yeah, you can deploy your own chain. Okay, but why do I don't need the EOS token there. I just build my own chain.
Well, that's the problem. That's the problem of most of the. I mean, when I was like talking about it in the staking as a service provider ecosystem, and saying that, but why should we support those projects that are building what I call ICO, but not initial coin offering, but initial chain offering? Because, and they were like, oh, but it's actually more business for us. I was like, yeah, but it's just like complete bullshit, you know? Like, I mean, some of those projects, they need a chain, but most of them they don't. And that's the problem in this space, is like, even the people that are building and they're very involved in tech and they understand it, they won't call it like complete bullshit, because they actually, their business is involved in that, and they either received pre-mine tokens, or they received pre-allocations. But yeah, I mean, last year you don't really hear from them anymore, but most of those guys, they were focused on building the chain than actually building their business model. If their business model is to compete and fight climate change, why do you need to build your own chain? I mean, tell me about it. It's something I don't understand. So you'd get your entire team to build a blockchain for the sake of providing some carbon offset or like climate change solution, but you know, like your business is not about building a chain. Otherwise, get a consulting company to do it for you. You know.
Yeah, I mean, I like what Polkadot is doing. I like what Substrate, I like what Cosmos is doing. I like what a lot of these other chains are doing. But it gives me really like a feel. It's a lot of like research that, you know, we all can use in building blockchain applications. It's really cool. But then the token economic model, looking at that as a investor, I would say I don't fully understand. It's the same reason that I don't understand Ripple XRP token that much. It's the same feeling I get with some of these other networks.
Yeah.
Okay, cool. So we agree on that. So yeah, it's nice. I talked to some people about it, and they're all like, no, but you need the main chain to say, no, you don't really need the main chain to sync back. You can just, you know, whatever you want. It gives you freedom to do whatever you want. But maybe you get paid to do it. Yeah, that's a different story. That's that's fine. Okay,
I mean,
cool. Yeah.
Starting new chain, obviously the business of building new chain is because you get paid for it. I mean, and you can also do like initial chain offering, so token. Well, now actually, yeah, it completely moved away from. Oh yeah, I mean, this space is crazy because everything just lasts 6 months or 2 months. You know, before it was like ICO, and then it was like initial chain offering with other people offering their own chain token. And now we are into yield farming, where you don't need a chain, you just need a token, and then airdrop those tokens to people that are doing yield farming for you. So let's see what's coming.
It is moving really fast. I do agree, Julien. But what I do see a lot of primitives building up, right? So first we had the ICO, we had this useless utility tokens, but now we actually talking about token economics much more, right? So I was doing research also in 2017 to like all these tokens, like, oh, there's no really token economics there. But now you can actually calculate price to earnings ratios, right? So for example, let's make the segue into Curve for that regard. So CRV Finance, I really love the project, and really good work there, Julien. Thank you very much for all the work that you guys are doing there. And I also think that CRV Finance really makes like you looked at Uniswap, and you basically build a pool. Like I will also drop the link below. CRV Finance basically is basically liquidity pools where you can pool your capital and earn interest on different stable coins or different assets, right? And I like the mechanism because there's no really impermanent loss because of the bounding curves that you used, right? And I think all that, maybe you can explain a little bit more about it better yourself, but I think like CRV Finance wouldn't exist without some of the past evolutions in blockchain, I think, right? Or what do you think?
Yeah, I mean, Curve, well, actually, CRV Finance was the maths behind CRV Finance are really from Michael. Michael from CTO of NewCipher, and he created this new white paper about this kind of new bonding curve that were used, and then later on put those ideas and thoughts on chain, on Ethereum. But the reason why Curve is so good compared to Uniswap, Balancer, whatsoever, well, first, Curve is only stable coins. And what you do in Curve, you provide liquidity to those different pools. And when you provide liquidity to those different pools, obviously, to maintain the different weights in those pools, you've got those kind of auto market maker and also people outside that are providing, well, they incentivize using like positive fees or positive slippage or negative slippage to provide and to auto balance those pools. Meaning that if you invest in stablecoin, you actually never lose capital because you get the trading fees from those pools. So think about Curve as, the market in traditional finance, the FX market, when you need to swap those currencies, euro to dollar or to yen, and like different currencies. Well, it's the same, but back then if you use your bank, the bank would probably use a hedge fund, and inside the hedge fund, you have some traders, and those traders, they will find and they will buy, they will sell different quotes for different markets and different pair for these different currencies. Well, Curve completely remove the middleman, being those institutions that provide trading on their behalf for their clients and then to make those products happen. So Curve is really like tapping into this kind of market. We're providing the best way with near 0% slippage to swap your stable coins. So for now, we have pool denominated in dollars, but the plan is to have euro, to have yens, and all the different currencies as for now focused on stable coins. But maybe in the near future, we can introduce like crypto pools or whatsoever. But that's what actually the focus is. And that's the reason you can look at the volume. Now it's like 1.6 or 1.7 billion liquidity deposited on Curve, and a range between 150 up to 350 million USD swap across those different pools. So the more volume, the more fees goes back to those people that providing liquidity, because the system, what is called an admin fee, will take 0.04% of whatever is traded across the different pool back to the liquidity provider. Well, now it changed a little bit because the governance introduced a new concept where now instead of sending those 100% of the 0.04% fees back to the liquidity provider, we send 50 back to them, and we send 50% of whoever lock Curve token inside the governance to participate in the governance, and to basically we incentivize them to update and to make evolution of the protocol rather than actually just providing liquidity, because we want the system to be completely decentralized.
I really like that, and I think it's an evolution of the token. Huh? So how do you like that? Because you're working semi part-time, full-time on Curve. Huh? It's one of your main focuses at the moment as well, right? And
Well, I mean, I'm involved in Curve. I was there at the early beginning of the project, and really like the vision of Michael, and I will support whatever Michael is building. That was um, as Tech Capital. We were involved in New Cipher from the early days. We've been following the project from. So yeah, that's the reason why I look at the maths, and as I mentioned before, I'm very into mathematics and very into physics and whatsoever. So I understood the concept, and I thought that was a brilliant idea, and it was interesting to get involved. Yeah, I mean, that's what people, when people they fork the curve or whatsoever, and they say, oh, those guys, they will introduce these things or whatsoever. We have so many things in a pipeline. I mean, Curve has been working on a few different things, but it takes time to build them.
Yeah.
And to introduce them into proposals. So what we've been trying to do is like incentivize people to actually come up with their own proposal, to feel like they own a piece of the Curve protocol, because Curve will become one of the major piece of the decentralization in the near future, because Curve will be a system where you can swap stable assets, stable coins, and apparently, according to statistics, they're saying that the market of crypto market cap, the market of crypto, the crypto asset, the crypto market cap will reach about 60% being at least stable coins. So imagine if we go up to 500 million or 500 billion or 1 trillion as a crypto market cap, and you need to swap 10 or 20% of that market cap per day into a system, and this system will be Curve. So more fees of trading fees back to the people that are providing liquidity, and also people that are involved in a protocol. At the moment, we're incentivizing them because they lock their assets. So they basically are people that are active as governance, inside the governance. But we also be providing new incentive mechanism, such as, for example, people have been discussing dev treasury funds, where if you provide help, or you provide any kind of services to the protocol, then you also receive stuff. I also want to mention that people have been focused too much on the price of the token. I think that was wrong. When people, they were like, oh, the token went up to $60. We were very, very clear from the beginning that those, like, pricing the token that much, like from exchange, that was really dangerous, and it's completely stupid. If you look at the entire market cap, 60 times 3.3 billion, that's ridiculous. I mean, everyone would just call it like scam, that's not good. But if you look at the intrinsic value of the protocol, what Curve is bringing to the market is really unbelievable. And also it's the first project, you can ask like any other project, being completely kind of decentralized. The project is built on Aragon, for the DAO, Decentralized Autonomous Organization, completely 100% of Aragon. And you can decide almost everything as long as you have tokens inside the protocol. All the other systems, they're not. You cannot decide whatever you want in the protocol. In Uniswap, you need 10 million tokens, and you can still not do anything you want. In Balancer, the token is worthless. Even if I really love Balancer project, but the token has no value, you can probably like decide in Discord or whatsoever you can signal. So it's fully decentralized.
Yeah. And there's also a nice evolution, I think, of the token economics, right? I also like the GOG relative weight. So basically, if I have governance tokens, I can say this pool should get this much Curve distribution. I like it.
Yeah, that's
like evolution.
It's exactly, it's when we were building the crypto economics in Curve, that's exactly what you do in society. I mean, some people can argue that it's bad because it's kind of like capitalism or whatsoever. But the moment that's the best mechanism that we understand and we know in society, where you can, based on the work you provide or the capital that you provide, you can basically incentivize the network, you're saying incentivize the system to act in your interest. And what happens here is like, if you receive curved before we announce the curve distribution, or you provide liquidity, we're going to give you partial ownership of the curve protocol. And then you can use those this power, because I really call it power in terms of governance in blockchain, to either make new proposal to change the protocol, or to decide where the next ownership, or like the biggest distributions of those curve token be going to be distributed across those different pools. And that's what people have been doing. Earn with Andre, they have a reasonable amount of curve token, and they've been trying to fight for the one pool, which makes sense. And then you have like Yobi, you have like Binance, you have all those different pools. And that's what we want to do. We want to bring healthy decentralization. If you do so, it's basically, if we tap into your bag and we tell you, you can actually decide how much you can receive, then you will make them more incentivized to participate in the governance of the protocol. And that's actually true intrinsic value. There's no other protocol the other project that are actually doing this kind of things.
Yeah, so I do like it. I really like it. And I also think, there's a lot of, I said, a lot of future proposals. I heard a lot of new pools coming up. The curve voting token, if you lock it up, you actually get an interest on it. And I kind of like the way the Curve team does this. It's also like providing, I've been a liquidity provider for Curve also from a longer time ago, just because I saw it's the most efficient for my stable coins, right? At that point, when the yields were not crazy high, I didn't know there was a Curve token involved. I didn't know that, right? That came afterwards. Similar now, you do this with the voting lock. So you let people lock their votes, but you don't say how much interest there is, right? I cannot see, there's no way to calculate how much interest you actually get on your voting Curve tokens, or is this interface being built or coming, or?
Yeah, we're building, Curve team is building new, trying to update the stats page as much as possible, but people, they need to understand that what's behind Curve. People have been saying that Curve interface or UI is very complicated, but the system that is behind is actually very complicated. It's more complicated than what you guys can see on the front end. So the idea of making everything super simple on the front end is super hard. And kudos to the team that's been working on the UX and the UI of the website, because it's really complex, and we're trying to provide as much as possible simplicity for the people to understand what's going on, but it's making a lot of different calculation behind the scenes, I would say.
It's a question also, what is your target market? I think we discussed it before the episode, but it's like the target market. Do you want to have the retail, or do you want to have more the pools themselves, or the more DeFi sophisticated people? DeFi,
yeah, that's a good question. I mean, if you really look at what the project is trying to achieve is really being a protocol, meaning that the goal is for other projects, such as institutions, or like also, like for example, Uniswap or Binance, or any project that want to find, for example, Aave or a Compound, or even like centralized exchanges. If they want to provide the user the best possible swap across stablecoins, then they better use Curve. So it's like, as the protocol, the vision is to be a protocol. It's like when you use internet, you don't know they're using HTTP, but internet works very well. And people still like use internet. That's the same idea. But obviously for Curve, you also want to be a DeFi community project. So that's why you provide, at the moment, you provide a UI and UX, but the focus of Curve is very on the tech and very providing the best services ever when you swap those assets. People have been complaining about the UX and the UI. That's why it's a little bit different, because the Curve is about you making money for yourself and providing the best services. So if you provide liquidity to Curve, you will not I mean, it's never 100% because it's in the DeFi space, but you will not lose money. It's not an impairment loss or whatsoever. It's about providing fees, trading fees for your assets without losing capital or without being wrecked by either impairment loss or by slippage.
Yeah. And right now in Curve, it's an Aragon DAO project. So there is no admin keys or, you know, like there's this whole discussion now about admin.
Yeah, that's funny. Yeah. Yeah, sorry, I cut you.
No, yeah, so a discussion with the BZX said it now still has the admin keys. I'm quite disappointed about that, but the Curve doesn't have the admin.
Well, yeah, I mean, the Curve, they have what we call emergency DAO. Emergency DAO is like if something happened to one of those pool, and you have like still like a range of different days that you can shut down the pool. That's what we say, like to make it simple, we can say like 30 days that we test it, and it's something Apple, we have the ability to shut down the pool because we don't want this pool to harm anyone. And this is controlled by the emergency DAO. In the emergency DAO, you have about 10 people that have the ability to pause or like to shut down the pool if something happens. So that's why it's funny, like in some project I've been talking about forking Curve, and they talk about, you know, this job like, oh, we're gonna bring those people in the multi-signature wallet. I'm like, what the fuck does it even mean? Because this is just like for marketing reason, because there's no such thing, you know. It's just ridiculous.
But it's important to have that because, like, let's say USD Tether as a time bomb and maybe explodes, maybe not. I think not, but maybe it will.
Yeah, I mean, yeah, that's a good point. I think it's a baby step. Aiming for 100% decentralization when you build some advanced technology, it's a bit difficult because you need, not everyone is aware of what's going on. So you need to be, I guess at the early stage of a project, it's really nice when the project is kind of centralized because you can go fast, and then you slowly start to make it decentralized when you're 100% sure that everything is going well. Like when, imagine you have 1.7 billion assets. At the moment, anyone can actually make a proposal to be included inside the emergency DAO if the person is saying, oh, I don't think this is fully decentralized. I think it's fully decentralized, but if you want to propose yourself to help and make the system a little bit more decentralized, then feel free to do so.
All right, thank you. I'll look into that. Well, the thing is that
actually, Amadeo, yeah, you should. I will lobby for you with my tokens that if you make a proposal, obviously it will be great.
That's really good. And but I think that the most important thing is like what happens with this emergency DAO, right? So as far as I looked into the code, what I saw is that you cannot move. It's just, it passes the pool and that's it, right? So you can still get your money out of the pool because it's just a pool with,
obviously. We cannot steal money. We cannot. No, we can't. Yeah. No.
Like in other, like some other projects, like when I lock my tokens, like for example.
Oh yeah. Sorry. Yeah. It's very different. Yeah. Here I'm actually talking like Curve DAO is very decentralized. What I'm talking, it's not like having the admin key of, for example, like in other projects that I'm not gonna mention, where someone can actually leave with the liquidity or whatsoever. No, you cannot do that in Curve.
Yeah, so that's why I didn't participate in the sushi thing, because I looked into the code. I was like, wait a minute, I give my liquidity tokens and then you can move them around, right? I was like, I looked into that, but then they're like, it's time locked. So the chef, it's time locked. I was like, whoa, this is too dangerous for me. When I looked in Curve, I saw like,
well, okay. you can provide liquidity until the time lock happens, basically.
Yeah, that feels very dangerous, and like I do want to sleep at night, you know, like.
Well, if you know when the time lock is coming, then you're safe until the time lock is don't drink too much before the time lock expiry, you know. Like,
that feels very dangerous to me. But the thing is with Curve, when you provide liquidity to Curve, it's not that you can like take the tokens or the DAI that I put in.
Oh no,
my address, right?
No. Yeah, exactly.
That's what, and when I look into Sushi Swap or other things, I'm just like, I feel a little bit not at ease, right? Or maybe that's unjust. I don't know.
I think you were safe in SushiSwap until the migrations, but because the contracts they were forked from Uniswap and then added with the time log, but the time log was transparent, so you could just get involved until the time log ends.
So that's what you did.
So everything myself.
Yeah. Or not.
Yeah, well, I mean, myself, I'm with the fund. We do we're a little bit involved, but I truly respect Uniswap, but so it was like it was for governance reasons and all different things. So and also especially when Sam took over, because Sam is a builder, so it gives a lot of legitimacy to the project. And also the Sushi Master, if you look at the code and how fast he was building, you clearly saw, it was clear that this guy knew what he was talking about. He was building a lot of different things. So at the end of the day, it provided a lot of value to Uniswap because it actually increased the TVL.
Yeah.
And people are more aware of what is liquidity provider, and they all got involved in this kind of business. I'm not sure if it's actually good for the people, because when the market tanked, a lot of people got wrecked with the impairment loss, but I think it's a good way of teaching people new technology, innovation. And at the end of the day, it took more. Now Sushi Swap, they have a lot of volume, and Uniswap has got more volume than when Sushi Swap was when Sushi Swap forked. So yeah, it's
and so talking about, you have CRV Finance, but there's no permanent loss. But of course, with a liquidity pool with, let's say, ETH and DAI, or ETH and Bitcoin, Rekt Bitcoin, there will be impermanent loss when one of tanks, you lose the other, but you gain that one, or right.
If we ever introduce crypto pools, then it will be different than Uniswap balancer. But this is not a priority for now. But yeah, obviously that's the idea, is to be able to provide something. But I mean, calling 0% impairment loss, I think this is kind of ridiculous. You can actually approach near, like, for example, like when balancer, they said we moved impairment loss. No, I was a little bit always skeptical, but I think there's new innovation that can be built around different curve parameters, or like different way of looking at the when you're very far away from the peg, or when you close, you can have a dynamic curve and all the different things, as long as the maths and the on chain is not too expensive or whatsoever.
Yeah, and also you said also FX markets, so maybe like synthetic euro dollar.
Yeah,
markets?
obviously, yeah. So synthetic assets, and also something that, I mean, this is not an alpha leak, but obviously makes a lot of sense to do. Interest bearing using Aave, so like pools, where you can also provide credit lines, all those different things. So you could provide like an A pool of stable coins, and obviously people, I hope they don't take it as an alpha leak, because it makes a lot of sense for CRV to do it. It's a little bit more complicated, and still audits going on, but yeah, that's the idea. I mean, basically the idea is to provide more volumes, more liquidity, so then provide more utility for the people that are involved in the project and governance, and that's it.
Nice.
The more you share, the more you get.
Nice. All right. So yeah, CRV, a lot of developments going on. So you have, and also I want to point out to the Rekt newsletter that you created. It's really cool. And then we have the saga with the fork that happened, and we have the View token saga. I will link that in the description below. It's a really good read, a really good work there. It's pretty cool. Yeah, let's move to NFTs, right? So like you're involved.
Yeah, I want to get back on the the reason I didn't write those articles. Okay, I just want to be clear. I just provide a space for people. Um, it's a voice for the voiceless. It's really for people that have something to say and they want to say it. My point, if I want to get back on the Swerve article, obviously for me, it was like someone decided to create this article. I was not going to say no, because I've seen what the Curve team has been building. I've seen the amount of work, and it's almost like 24 hours a day. You know, like most of the people in the Curve team is a small team. They don't sleep. They work all day, and yeah, I think it's you need a lot of respect for the work that's being accomplished, and whatever is being said against Curve. Just basically don't trust anyone. Look at the math, look at the chain, look at the transaction, and then make a judgment yourself. But don't listen people, don't listen lobby, or don't listen to what people have been saying, because this is not true. As long as you can demonstrate on chain that what you're claiming is true, then we can have a chat.
Yeah, I agree. That's interesting. And so if people wanna write an article for Rekt, they contact you and they can stay anonymous, or they can write it.
Yeah. Correct. We have like about 5 different people that are working on some fantastic articles. Some of them they decide to stay anonymous, and we respect. That's what we give. We have a disclaimer over there that no one will be attacked by posting information, and even if we get attacked, they will not leak those names, because that's the disclaimer. That's what we offer. We offer a platform for opinions and research, as long as those posts are bulletproof in terms of on-chain data and facts. So Etherscan links and whatever, and then we never make conclusions, or like we tend to drive the user in one direction or something, maybe sometime, but we never give conclusions. So it's always up to the user to make its own conclusion of what happened.
Yeah, that's really, I like it. That's really cool. I will.
And now it's a DAO, so I found it, but I'm not in control of it.
We should get like Rekt tokens and short some stuff. I also have some juicy stories, or
maybe it would be cool, actually. Like, I've been thinking about it, making
I
a
found some
token, and
exploits
people
and some codes and some projects. I never published it because, like, yeah, it takes a lot of time to actually exploit some of these things, right? And it's I also don't want to be negative, like, but yeah, well, it needs to be done, and I like that you give the neutral platform for it, and it is very important, especially with like 1,000% of APIs. Of course, it's completely unsustainable for some projects, for most of the projects, and they're just trying to do that. It's going to be rug pull after rug pull after rug pull. So it's really important, I think, to have like information like this to let people educate themselves about the things that can actually happen. Yeah, I don't want to get too much into the the bagel, or I don't want to go too much in in that. I would rather talk a little bit more about NFTs. But
let's talk about stuff that are positive.
Yeah, because there is some stuff going on there. But if people want to read it, go to the Rekt newsletter. It's an amazing article about the the bagel that was going on in the skewer, the bagel scam. I don't know how you want to call it, but it's
experiment, right?
Experiment. Yes, I think that's the right word. We're all.
Let's be diplomatic. Let's be diplomatic.
Yeah, and positive, right? I think positivity and energy is really important, and we can let's not become like toxic Bitcoin maximalist or like maximalist.
Exactly.
Yeah, it's all experiments, and I love it. I love it all. And if the experiment goes wrong, we also need to document that well and make transparent audit of it, so that we can learn all from it, I think, right?
Completely agree with that.
Yeah. So the NFT. So we talked about your staking service Curve, and you told you're now also active in NFTs, and I was quite cool to see BlackPool Finance. It looks really interesting. Maybe tell a little bit about it. What is BlackPool Finance?
So I mean, it's not new in a sense that Stake Capital, we've been really active in the NFT ecosystems. So, I mean, myself, I was one of the early buyer of a CryptoKitty, and been looking into the NFT market, and that's what we got Stake Capital to tap as a hedge fund, a decentralized hedge fund, to tap into the NFT market. But the reality is the NFT market is a low market. You know, it's you can bring your market maker bots and doing some arbitrage, but some people have been making a living, like making money across like NFT market, but it's a very small volumes. It's very small market cap, but we've been kind of like successful in this market. And then as soon as we saw Sorare, it's a football fantasy game, but compared to most of the NFT projects, as you mentioned before, you want to see intrinsic value. You want to see like real life, like into. Are you still there? I think your battery.
Yeah, so the video died off, but it's okay. We can continue.
Okay, so it's like then we saw the market of basically what happened in this football fantasy game is that each player in the world, or like most of them, depending if the company buys the license, they tokenize the player, and then they actually, it's kind of like the Panini card, you know, like back then and then those cards, they get real points, real experience. They go higher in value. Why? Not just because people are speculating on them. This comes after. First, because they get experience from the real games. So if, for example, Ronaldo or like Mbappe, they win, then they will increase the experience, and then you can use this card to play in championship, and then win new cards that have different level of rarity. Like so, either you have 100 of the same card, or 10 of them, or just one. So obviously, the less you have, the highest is the cost. And then you can play with that. So that's what we've been doing. We've been providing, and now Stake Capital was like, okay, we have too much things to do. Let's spin off a new entity that is just specialized in the NFT market, starting with the Sorare market, and then let people involved, like as manager, that understand the football, because you really need to watch football every day. You really need to get involved and knowing, for example, if you know that this player is not gonna play next game because he got injury, so you better not put this card, the NFT, inside the pack for playing the next game. But you might purchase a new player that is going to be as a replacement to this guy, because you know he's gonna play, and then you have a higher chance of winning a new card. So that's how it works, and it's very fascinating, but it's time consuming. So that's why it does BlackPool. BlackPool is really a strategy. It's kind of like the football club Chelsea. So Chelsea strategy is to buy a lot of players on the market and then lend them to other clubs. That's the strategy of BlackPool. Our strategy is very aggressive in the market. Our plan is to buy a lot of players and then offering those players to other clubs, other managers that are in need of new players with new skills, new specificity to play in those different tournaments. That's what we've been working on.
Very, very interesting. And I will also, I dropped the links to everything we're talking about here today in the description. Is also, it's quite new, everything. And if you go to cryptotram.io, I will drop the link below. You can see that Sorare is now the highest volume in the whole NFT space at the moment. And it's really
that's the reason. Yeah, that's exactly the reason why we tap into this market. I mean, people, they're all talking about NFT arts and like making trend on Twitter, and then okay, that's cool. But if you're building a business right now, you better look at Sorare in terms of volume, because you can capture those volume per day. And the other things are good if you're an individual and you're passionate about something and you want to get involved. but business wise, it's probably better to look at those kind of things.
For sure, for sure. And basically you're already an active player. So every time when a football match starts, let's say the I'm not really super much into football, but let's say Manchester, there's two teams playing against each other, and if you have players that cards of the NFTs of the players that play in that game, you actually gain experience points, and the cards are
Yeah,
more.
I mean yeah, exactly. I mean the points. So Rare, it's a company that are tokenizing players, and the only way you can do that, because I mean, football is very kind of how to call it, like diplomatic way, like very controlled, regulated. So if you want to provide the football players from Chelsea, you must buy the license from Chelsea. So Rare has been spending an amount of money, like 100K per club or 100K per divisions, to provide those players. But the data that comes to increase the experience of those players, they come from a platform called what is it called again? Well, you can look on Sorare, but it's a huge one. It's $1 billion worth company. They provide statistics across different verticals, but it's pretty huge. So they actually pull the data from them, attach the data into the prediction market, the marketplace, and that's how the points are going up. So, for example, from one day, if you have a player that's pretty young but has done 3 good games, your card might go up in 1,000x percent valuation. Instead of selling the card $1, you can sell it $100, or you could sell it like 150. For example, Cristiano Ronaldo
scores like very well in that season, or he plays an amazing match where
yeah. You have to be. I don't think you can play Sorare if you're not into football. Or except, no, actually, that's not true. If you're not into statistics, and you don't actually need to watch the game, but you need to understand who's playing, what's the next game. For example, during COVID, you had only few championships open. Only few, like for example, Italy was playing in Belgium, but French, Spanish, Germany, they were closed. So people that received or bought players from those championships that were closed, those cards, they were not playing. So they were actually going down in value. But the people that purchased Belgium, Italy cards, they were going up. That's the beauty of it, because what we're talking here is like NFT that are highly correlated by real life events, real life,
Yeah, also and I think this also can be applied to art actually. So, but also to other sports like golf or to football, whatever. I also see the art.exchange is a project from a friend of mine in Amsterdam, and this also looks very interesting, where you can basically bid on paintings. So, like say there's an auction for this expensive painting, and then you can bid on the painting.
Oh, that's very nice. That's very nice.
So that also makes a little bit more sense than just like an NFT of a painting that like, okay.
Yeah, I mean, the problem, arts and all those different markets, they're awesome. But the problem is always the supply chain. Always, how do you guarantee that an auction was not tricked into someone being bribed or something like that? You know what I mean? Like, it's good. But it's always like very difficult, for example, to give an estimation to a piece of art, except if those arts are really highly demanded, like Picasso and Mona Lisa and all those different things. You understand like very well that a lot of people are trying to buy it. But for very small volume, for very small market cap, then it's very difficult to have an intrinsic value of those different pieces. Where in football, for example, those players, they play in real games, and they you can see them, you can watch them, and you understand the output of the games. It's not someone judging at the end of the day, oh, who won or who lost. It's really like, so it's why like it's very difficult to bring NFT intrinsic value because of the supply chain. How do you guarantee that the information you bring on chain is actually correct and intrinsically speaking valuable?
It's amazing. I also see Consensus as an investor. There's some bigger Ubisoft. right? They're also
Yeah,
behind it.
yeah, it's huge. I mean, no, it's not like I don't understand what this project has been under the radar for so long. I mean, you have like big company. I mean, Ubisoft is one of the biggest, it's probably one of the biggest gaming company in the world. You have like some big VC in Europe. You have like a lot of data metrics. They've made partnership and license across biggest football clubs in the world. They also have the Asian, I think South Korea. They have the American market. It's pretty huge. It's pretty huge. It's pretty solid.
It's amazing. And I think that you're constantly in the frontier. Hats off to you, man. Like that's amazing that you spotted basically the whole DeFi yield hacking thing before it was cool, right? And now you're already building something. You're probably already doing this for some time now in the with Sorare and NFT space, or you recently started to.
No, yeah, we've been doing for quite some times. Otherwise, it wouldn't be public. But yeah, I mean, people was talking about it. Like I think 2 days ago in a DeFi friends group, someone asked me if I was involved in NFT, and I posted the link to BlackPool Finance, and they were like, "Oh, Julien, you shooting your bag?" I'm like, "No, dude, I've been involved in. I mean, we've been doing this for a long time. I don't actually need to show it. What you can see on the website, you cannot get involved in it. It's not about selling you a token or like yield farming. It's
No.
just us giving a space for people to understand that you have people involved in that. What it is like BlackPool is not like just a simple project or like, it's actually people doing research, but it's actually a team of people that are going to get paid a lot of money or whatsoever to investigate and research all day to buy NFT assets that are correlated by the real football market, which is insane if you try to explain to someone, oh, this person or this group or this entity in Europe, like in London or Paris, that represent that is the name is BlackPool Finance. They buy NFT on the market, and it's a regulated institution, or it's a license, it's a limited company. People were just like, what are you talking about? You know, it doesn't make sense. But yeah, it makes sense. It's actually like for the one of the first time in the NFT market, you have correlated data that you can just that are intrinsic value because you can gain. You can make money. Or you can what we apply there is exactly what a hedge fund in the city in London will do. We have bots running, analyze the market, analyze the trends, analyze the insights of people getting injured. Like for example, like we've seen that Neymar in Paris Saint-Germain got injured. So who's going to play next? Okay, no. Transfer wise, boom. Okay, we might actually buy this player. We might actually buy this goalkeeper because we understand that this goalkeeper hasn't been, for example, like this French player in Barcelona. Barcelona is not doing very well, so maybe we might buy those players because in national team they will play very well. So we can actually increase our return of investment for those players. We might land those guys, and it's fascinating.
Super fascinating. And I see on the website this is super fascinating. So if I want to become like a liquidity provider to Blackpool, I can it's like minimum of 10 ETH. And if I want to be manager, basically actually helping you with research, it's 5 ETH, and then I probably earn
Exactly. Yeah. So if you can prove, and again, it's not you trying to explain to me, because I'm not like, it's a DAO at the end of the day. It's like you send an Etherscan link and you show us, or you show like your account on this website that you've been actually been performing a lot of different good trades, and then you automatically added, and the cost of joining is cheaper than the cost of just providing funds, because this is how it is, you know.
But it is, they need to contact you, right? So in order to participate, they do need to contact Blackpool,
For
Telegram.
now, yes. We've been pretty busy, but the idea is to build a complete decentralized DAO. I mean, like a true one where people can provide funding and then receive a token that represent their ownership of this spin-off, this new vertical that is specialized in NFT trading.
Yeah, I completely understand. So now it's I mean, you move so fast because this NFT, that of course NFTs have been here for a longer time. But for me, the whole that is also a bit new. But you're already in it, and now of course it's a bit still centralized. But you need to build up capital, you need to build up managers, you need to build up momentum for this.
Yeah, I could. You know what? I could have gone like, if you look at the creation of this website, was like early days, like in early this year. I could have created a smart contract and then create like some yield farming or create a fake token and then sell it to people because it was a fantastic idea. I'm not into that. I'm building a real business. Even if it's decentralization, I'm actually building real business that I can pay people per day and not just from speculation. It's like a real business. We know what we're doing. All the different projects that we've been working on, just like intrinsic value. That's what we do. Then do BlackPool as NFT trading for the NFT market maker, arbitrage across different decentralized exchanges, like all the verticals of a hedge fund, you know.
Amazing. That's cool, man. I think I don't see a link to a Telegram group for it, or
no, we don't have, yeah.
Oh, so but how do you?
But we could potentially yeah, actually I saw there was a link to a Twitter account or like a Telegram. No, like a link to email. We'll update with a link to an email.
Okay, so you need to email with credentials, and then you can be
Yeah.
part of BlackPool.
For now, yeah. Except if you LP and then LP will just donate. But for now, and also like it's difficult, you know. If you remember, I create arbitrage DAO when I did the first flash loan on the market.
I saw that.
And then the idea was like, okay, let's do it. Before doing a flash loan, I was like, okay, I'm creating something called Flash Boys, being involved in arbitrage. So let's pool capital all into one pool and then play with this capital to do arbitrage in the liquidity provider into the space. Well, the reality is like it's much more complicated than that, because it's you need to, whatever you can do on your own, it will bring you more APY because you're playing with your own capital. So in order to provide a pool for people to provide fund and then create the same APY, you need to chase a little bit more. So that's why in BlackPool, I'm not reproducing the same error or the same mistake that I've done in arbitrage DAO. This is like closed for now. And even liquidity provider, for now, if you want to provide liquidity, you will need to show that you actually provide value as well into the system. Because otherwise, if the pool goes up in value a little bit too much, then it will be difficult for us to make a return of investment, because you will need to capture way more capital in the market. But the NFT market in Sorare, for example, we're talking about 22 or 20,000 USD per day volume. So that's why if we have like a pool of 1 million, then it will be difficult to guarantee APY because the volume is not enough for us to do so.
Yeah, but it's also a longer term investment. I think it's like if you're part of the pool, you probably have part ownership of these NFTs that might go up more in value, right? So.
Oh yeah, definitely. Yeah, of course.
But that's an interesting technical challenge on how to make a pool where you can see your partial ownership of all these different NFTs. Basically, it's not an underlying pool of capital DAI and stuff, but it's an underlying pool of capital with NFTs. So you need to show all the NFTs that are behind it. It's quite interesting.
Yeah.
Wow. Let's see where that evolves, man. I'm really, really excited. So I will drop all the links to BlackPool, to Rekt, to everything in the description below. Where can people do you want to mention something more about NFTs, or
in which sense? Like,
there's so much to talk about, right? I think what we need to do, because I need to let's wrap it up for now. Let's wrap this interview up, and then let's check in.
Oh yeah, it's been 2 hours, no?
Wow. Yeah, so it's a long time already. Let's wrap it up, and then we check in back let's check in back in a couple of months or a month. Let's see what's going on, and in the meantime, I will be still active in Curve. I will definitely check out BlackPool Finance, and I also would love to become LP there as well. message you
Well,
about that?
first, I think you should make a proposal for being a Curve emergency member or something.
That would be an honor. That would be very cool and very good for, I think, the more decentralization of Curve Finance in itself. And I'll write that down. I will do that after the call. Okay, man. Julien, it's been so much information. Thank you so much, man. Where can people find out like more information about you if they want to follow you?
Well, I think my Twitter is probably the best place for people to message me and ask me questions.
Perfect.
Yeah. Don't
I will link to that in the description. And let's keep on connecting, guys, and let's all keep on building. And
that was awesome. Thank you for having me, and
thank you, man.
And kudos to your podcast. It's fantastic, and it's really great. We need more people like you.
Thanks, Julien. That's amazing, man. Like, I just try to do this out of like educating myself and everybody around me, just to move the space in general forward in a good direction. And I think we can move in a good direction long term. And we just need to all focus on positivity and build real world value like you do now with the NFT games. It's amazing. It's really amazing because there's like it's not just pushing tokens around or, get rich quick. It's just, real value. There's some real economics behind it,
Exactly. Yeah.
Really cool, man.
Cool.
Okay, let's stay connected, man. Thank you everybody for joining today's episode. And I will drop all the links in the description below. Follow Julien on Twitter. Follow all his amazing work, and also check out his GitHub. It's all in the description below. And let's stay connected, Julien. And I hope to invite you very soon again on the podcast. Thank you very much, man. And
awesome.
Amazing to have you on this channel. And let's keep on building together and push the space forward in a positive and good direction. We can do it, man.
Let's build.
Let's build.
Cool. Have a good day, man.